From the more than 2,000 ETFs in our screening database, we have selected 3. These are potential ETFs for 2025. This is for the short term. The definition of a top ETF is based on momentum, a kind of momentum trading strategy that you could use for example, riskier themes, ETFs that are experiencing strong momentum, where you can ride the wave. But the downside, these kinds of top ETFs, is that they may also be overvalued. Can be as well. So it's more of a short-term trading strategy. And these ETFs are, of course, suitable for the more active investor and so the advanced investor. ETFs are inherently a tool for the long term. So in these top ETFs, you won't find any global ETFs. The words are not coming. No, it's about higher risk thematic ETFs that have a special story, a narrative, which is why rise a lot. So here we might be able to take advantage of the emotions in the market, and also a bit of fear of missing out and greed play a role in that. So be very careful with what you do. I wouldn't recommend investing too much in top ETFs myself, but sometimes now and then we find good ideas. Like, for example, a top ETF for Argentina, which I also mentioned in 2024, and it has achieved a 70% return in just 1 year. And it can still be that this ETF is a top ETF for the next 6 to maybe even 12 months. Well, I thought up to and including quantum computing, and a top ETF is for the next 6 to maybe even 12 months. Well, I thought up to and including quantum computing. Let's take a look at this selection of 2,000 ETFs. Which 3 top ETFs we have selected for you now? By the way, about 80% are already more. Don't subscribe to our videos yet. I would really appreciate it if you would subscribe. And if you give a little like to the video, why only do it if it has helped you. If you think our videos are useful from Happy Invesco, because we help you with simple investing for financial freedom. We do that through payment services via our website. But through YouTube, we create free content. And the more that content pays off, the more content we will create, and also of higher quality. For what? Thank you. And let's take a look at this top ETFs. The first top ETF for 2025, in any case, for the maybe very short term, is Argentina ETF with the ticker ARGT. Now, this ETF, you probably have never heard from this ETF, but it achieved a return of 76% in 2024. Let's take a look at some characteristics. By the way, I already mentioned Argentina in 2024, beginning 2024, and it has actually performed really well. But the upside potential has, of course, become a bit less after such a big increase. That makes sense. The name of the ETF is Global X, Argentina ETF, with the ticker ARGT. But internationally, probably have other tickers to invest in Argentina. Keep in mind that this analysis is about this specific ETF. You see a holdings breakdown here. Not really much special to mention, except maybe there's quite a bit in energy, utilities, and materials. Those are generally more cyclical stocks. I had already explained the entire investment thesis in another video about Argentina, about the macroeconomic developments, about a kind of transition of the government from bureaucratic to a kind of rule of law, which has at least saved a lot of costs from the bureaucratic level, and now the economy is trying to stimulate, but seems to be working out well in the short term. But the question is, what is the effect in the long term? We're really focused on the short term here, so that's a big difference. The top 10 holdings, the largest of those is Meili. Mercado Libre, this is a great stock. I've been following it myself for a long time. Actually, I want to have it in my portfolio one day, but I'm waiting for a possible short-term drop that could be very interesting. We have IPF, a company in oil, specialized. We have Banco, but that's a company in finance, a bank, Pampa Energia, also oil. And we see some other banks. We also see Desparag, which I recently sold myself, plus 60% in 8 months. Why? Despolgao has been acquired by Prozis. So, yeah, had to sell the stocks. It's a shame, because it had a lot of potential. And we have also mentioned in our analyses about good stocks. Now, first of all, lessons learned. If you have winners like IPF, OPA, Energia, Banco, then you should actually hold on to them for as long as possible. I didn't do that myself. And that's why I like to share what I do wrong, so you can learn from it too. But also for myself to keep reminding myself, well, you hold on to your winners, it's that simple. So I took my first positions in Pampa Energia 2021 and you see frequent purchases. I also bought in again early 2022. So goes back a while. And then I sold the last position at the end of 2024. That was a short-term drop. And if I'm being very objective, I let myself get a bit carried away based on emotions. Because by Energia, it's not that I know the company inside out. It's also a cyclical stock and it's in a country far away from where I live. So my first positions were good because the valuation was actually still very attractive back then. Actually, I had already held onto it because I had a 400% return, but I sold at about a 250% return. And the last position I sold, as you can see, is August 2024. And that was actually right during the vacation. And that was during a short-term dip. And now it seems like very little. But back then, was it still a bit uncertain whether everything was going? Oh, and I had actually held on since the moment I sold. I think it was around here. Recently, I sold it. Let's say it was here in this week. If I had held on longer, my share would still be up 80%. So the painful issue is selling your winners too early. I can show you that Central Puerto is also in the 18th ETF. I had bought a lot of Vulde since 2021, just saw Banco. But I have to look for a Banco here. But I also bought a position just much later in 2023, a bit on IPF, just not anymore. What I bought a bit too late, unfortunately, also. The end of 2023 was a year ago. And also Crescent. So I see that. So it is also in this ETF, but we need to take a look at all the holdings. So the Argentina ETF, I thought the moment had passed, but you see the winners just keep rising. So that's an expensive lesson learned on my part. Why is it still possible to have a top ETF for 2025? Argentina still has a super strong momentum right now. One of the tools I use and find really interesting as a screener for analyses, really I use about 4 or 5 in total. So this is not the only one, but that's the one from Seeking. Alpha and from something like over 2,000 ETFs. Do they have some kind of screening methodology based on momentum, costs, dividends, risk, and liquidity? And the potentially best ETFs rise to the top, and they then receive a higher rating score from 1 to 5. And 499 is almost top moment, but it's very strong based on momentum. Now I have an ETF in my portfolio that actually has a strong sell at the moment. And in my portfolio, I have an ETF that actually has a strong sell at the moment. I just prefer to go for a stock with less risk, which I think is more undervalued. And sometimes you have to wait a long time before that comes out. And Argentina is a case because I already bought that, as you can see, in 2021, which I just showed. And yes, it's still a strong winner with a lot of momentum. Only the valuation has also gone up. So don't regret my choice to sell. I should have set a stop loss in hindsight and let the winner run. Now we see that this ETF is still, for a longer time, also scored high in the factor analysis over the past year. But that's what you want access to here. You'll find a discount link to Seeking Alpha in our YouTube description, in this case, and also our other screenings, the methodologies that we use. Discount link, then you can also try it for free. There's no risk, you can just try it for free. Here we see the momentum, and so the total return for 1 year is almost 80%. In the past 3 years, it's just been 200% with an ETF. So you could triple your wealth in 3 years. That's almost, if I'm saying it right, 25% return per. And that, the thematic ETF. However, there are certainly risks involved. Argentina has already risen a lot, as we can see. The momentum is still strong. But the valuation has gone up a bit. And there is, of course, quite a bit of volatility. So it's not really suitable for beginners. If we look at the expense ratio, it's not particularly more expensive than other ETFs. The dividend grade is currently 1.3% dividend yield. It's not a dividend ETF. That should go without saying. But what's interesting to see is that dividend growth, right? I personally wouldn't buy this ETF for the dividend, but simply for the growth potential. And then more specifically for the short term, maybe even but up to 6 months or 12 months. So that's also a bit more risky. But general, then this ETF will still increase based on momentum and valuation. And it also depends on the macroeconomic developments that are very important for this kind of investment opportunities. I should say it's more speculative. So then you're also dealing more with short-term trends like news and things like that. The risk is relatively high. The standard deviation is significant. Significant. What does that mean in practice? Well, keep in mind significant price drops. In the years of negative growth, 20%. Often the last time it was also down 12%. But there were also other moments when it was down, for example, 35%. And that's quite a lot for an ETF. So a lot of random investors won't be able to value this ETF. The turnover is quite a bit higher, 30%, which means that new shares are frequently exchanged every year. There's also a tracking error that isn't very positive. But all in all, the ETF is performing really well. Liquidity seems to be okay. Right now, there's about 1 billion in the fund, and the daily trading volume is $30 million. Well, as I said, the ETF has risen significantly. And if you look at a bit of technical analysis, what can you say? It has risen significantly, the ETF, and it might keep rising a lot. If you go look at probably the RSI, you can see that below. That goes above 70. So then technical analysts say, it's overbought, too much has been bought. Overbought, too much has been bought. Only an RSI can stay above 70 for a longer period because, simply put, the momentum is just very strong. And might also be the case for Argentina. Always check the website, the fund's issuer. There you will find important characteristics. These are just free information sources that you should always definitely needs to be studied. What stands out, for example, is that the number of holdings is only 25. That's also specifically in Argentina. So you can already name two risks. First of all, geographical risk, and secondly, concentration risk. Because 225 holdings aren't many, perhaps from standard deviation, to create enough diversification. But of course, it's also only focused on Argentina, targeted. So that means, essentially, for a longer time like Argentina, what is certainly not a super definitely stable economic country is, if everything turns around, the momentum and the new moment are very positive. It turns out in hindsight, yes, then it can sometimes lead to very long-term losses, even permanent losses. And that is a comparable risk. So not the volatility in the short term with price drops, but the risk is potential permanent loss. Well, Meli is, of course, a great company. I think so myself, with long-term growth potential, has been following for many years. Unfortunately, I missed my chance to buy in 2022, 23. Then I should have bought, but didn't do it. But you also see that 8% is in Meli, so that's quite a lot. For the rest, you see a higher percentage in EPF and some other companies. The current valuation has now risen to 18. The energy I bought, the price to earnings was only 3. So that's bizarre, low, and once again with a high return on equity. But the price to earnings has increased. And the price to book value has also gone up. That's still quite a lot compared to, for example, the S&P 500 or the Invesco QQQ. But that's, of course, a completely different type of fund. Let's compare it with the S&P 500. This ETF, of course, has many fewer holdings, but it's still much cheaper than the S&P 500. And the return on equity is still acceptable at this moment. And it seems that, and that's, of course, the macroeconomic side of the story, this ETF can continue to rise. So all in all, it could be that there might be a significant price drop in the short term. That happens frequently and often for this type of ETF. Min 15%, min 10%, min 25%, it can happen just like that. If that were to happen, then it could be such a nice first moment specifically for the next 6 to 12 months. And for the very long term, that's just the question. I don't know that either. That's just looking into the future, and no one knows that for sure. Finally, just a small sidestep. Do you want access to our buy and sell signals that you can see here? Then, explained again with the monthly update of potential best ETFs. Then check out our ETF alerts on the website. Then you get access to weekly buy and sell signals equipped with our expertise on ETFs and also a monthly update of top ETFs. And you can find that on our website, which you can find at vestagings.nl or International Invesco. And the price is not exactly super high. Plus, you can also try it out in 14 days. What about Argentina? Now, let's take a look at other ETFs. The artificial intelligence hype isn't even over yet. And the hype has already started again. That's what I'm talking about. Quantum computing. Now there is a company called Quantum Computing, very fitting, of course. And look at the bizarre returns of the past 6 months. Vlafian percentage has actually risen sharply recently in 2024, then dropped particularly hard by about 65%. And alone, the stock has risen by about 80% in just 2 days. Really bizarre. Is this a hype to get into? No idea. I wouldn't dare, and I wouldn't advise anyone to invest in hypes. But we're here for top ETFs, and top means momentum. Well, one of those momentum ETFs that is performing very strongly right now is the Deviance Quantum ETF with the ticker QTUM. This ETF really won't be available at every broker. There's nothing I can do about that. The alternatives might be available through your broker. It depends a bit on how big the broker is and whether the ticker is available there. Now, in this ETF includes a number of interesting names, like, for example, a Taiwan Semiconductor, a Mark Technology, and an ASML. That's not the reason why I would want to invest in this highly speculative hype ETF for this year. I definitely wouldn't do it. But it could very well be that this ETF will achieve high returns because you know how the markets are in the short term. The fear of missing out always plays a role. And yes, emotions play an important role in investing, of course. And certainly in the short term, it can be MR, but it can sometimes take unexpected turns. Now, 32 holdings. What I do like about this ETF is that they apply an equal weight. In other words, all holdings get an equal kind of weight based on what you see, 100%. This ETF, Mike, has actually recently scored as a strong buy, namely due to the increase in momentum, but also actually over the past 2024, it scored as a buy for a while and even as a strong sell or a sell. And you see, quantum rating doesn't really say everything. It's mainly based on momentum, and when momentum increases, the score also rises quickly. So that doesn't say everything. The return over the past years was 52%. So a very large outperformance compared to the median of all ETFs in this data pool. You also see that the extra return over 3 years was also 50%, so actually there's no difference. It's really only this year that there has been strong return is an increase. So it might be that you're too late for this hype, but sometimes such a hype does continue. The expense ratio isn't very high. 0.4%, that's not too bad. They even pay out a little bit of dividend. But of course, this is not a dividend ETF. Risk, the standard deviation is 21. But what does risk mean? If you ask me, risk means permanent loss of money. And is there a chance of permanent loss of money in this ETF? To know the answer, you actually need to investigate all the holdings. If we look at those holdings and you see, for example, a Taiwan Semiconductor and an ASML, those are high-quality companies with a sustainable competitive advantage or a moat. But these other companies, Rigetti Computing, I have no idea what it does or if it has a chance of success. And there will be many of these hundreds in there which probably have a low chance of success. Also, something you need to know about industries, new industries, is that when a new industry emerges, you always see a growth of hypes and innovation. And a lot of new companies are popping up. And at some point, a shakeout occurs. They actually call that a shakeout. But just a few winners, the really good companies, and often a bit of luck break through. And all those other losers, they all drop out. And in this case, I think the stage of quantum computing is still just before that shakeout phase. So there will be a lot of new names coming up now. In this case, I think the stage of quantum computing is still just before that shakeout phase. So there will be a lot of new names coming up now, with a high chance that many of them will go bankrupt. And that's why I'm not a proponent of investing in hypes. Well, it will be interesting that no matter how you look at it, there will come a moment when that quantum computing is going to drop significantly. Because actually the future will only be realistic in about 10 or 15 years, maybe even longer. So there will really be a big moment when it drops significantly, but in the very short term, the momentum can continue. The liquidity seems to be okay. It's not a very large fund, almost 1 billion in fund value, and the daily volume is 31 billion. There are also a number of similar funds. Funds, of course, when there's a hype, everyone wants to benefit from it. So here you see a number of names that are somewhat similar. They can adopt different strategies, but they can be a bit different from each other also. Where you see big differences, this is, for example, a very small fund like the eShares technology focused. The ETF is a slightly larger fund, but still 400 million isn't very big. In terms of performance, you can see that this ETF, the Quantum ETF, is actually doing better than the similar ETFs. But yeah, that's all based on momentum. And the question is, what's going to happen? This hype ETF will continue into 2025. I have no idea how much more I will be there, but that's why this is the inspiration. And this is specifically for swing traders and short-term traders, those who want to profit a bit more speculatively of the possible hype, but no idea if it's really going to rise in 2025. The only thing we know for sure is that right now it's a top ETF based on very strong momentum with an annual growth 52%. And also, if you look at something like quantum computing, little stock, what bizarre returns they can achieve in just a month. Then they talk about cryptos. But these kinds of AI and quantum computing hype stocks might be even more interesting. And forget, there is a real, actual physical company behind it. And that's still better than a fictional Shibu coin. A crypto coin that you can't do anything with. And that was put together by a little student from China. Do you know what they all do? At least there's still a team behind the company. The only question is whether it's all viable. Time will tell, and I'm definitely not going to take that risk. Last top ETF for 2025 for at least 6 to 12 months is Roundhill Magnificent. Set, ETFs, and this fund would be a bit overvalued if you look at the holdings, but the strategy is really very simple. What do? They actually just invest very concentrated in the Magnificent 7 stocks. If you don't know what that is, those are actually the 7 biggest amazing companies at the moment. Apple, macro all the way to Amazon, and also Nvidia and Tesla. The last two might be a bit higher in terms of valuation. But for example, Amazon seems very interesting. Still both for now and for the long term. For example, long-term growth. And also just quality, interesting valuation, even though they seem a bit more expensive. For the other stocks like Nvidia and Tesla, you can analyze all of them individually. That's the beauty of it, and it's actually a very simple way of investing. I just wonder, why would you actually invest in this fund? Because it has an expense ratio of 0.3%. Can't you just buy these stocks yourself? There are only 7, so you have a very simple portfolio of 7 great companies for the long term. And that's what they do themselves, the fund. Every quarter they rebalance the weight, so you actually get an equally weighted basis every time. That might be the added value that they provide, but it does cost you 0.3% per year. Moreover, I personally advocate for owning stocks yourself. You never know what happens with a fund like that. Then at least you own those stocks, even if it's all just electronic. And also that if you think very far ahead, you can do it yourself. Maybe it will be taken away from you in gloomy thoughts. If you look at the gloomy thoughts, if you look at the performance in the past year of the well-known Invesco QQQ, a great ETF if you ask me, with 100 innovative companies, and the S&P 500, and then the Magnificent 7 stocks. So in this case, the ticker is MAGS. Then you see that the ETF has max 65% returns achieved in the past year, and that's significantly higher than the S&P 500 and the QQQ. So QQQ is already a great ETF. But of course, if you wanted to go for the S&P 500 outperform, then it could have been done with max, super simple, 7 stocks in your portfolio. Maybe what concentrates for most. But if you look at the outperformers also over 3 years, that's really a bizarre difference. So also from the QQQ ETF, so it has performed better than the S&P 500 over the past 3 years. You can really see that the Magnificent 7 stocks have actually accounted for the majority of the performance, right? Well, the question is about this trend up to and including 2023, what the price movement would have been like since 2022, but I think the difference would have actually become even greater. So, very interesting, by the way, the Invesco QQQ currently has a buy rating based on the quant. Even in my portfolio, I've sold off because I just think that the ETF is a bit overheated. Just look at the overall market, the situation, and yes, it only takes a few negative events to happen. with a somewhat worse economic progress, and confidence drops a bit, and then there could be a decline in the price. But that's my personal opinion and strategy. The Magnificent 7, Roundhill 7 ETF, is actually quite interesting. It's currently scoring high on the factor analysis. That's actually been included in the model for quite some time. So that's why this is number 3 as a top ETF with strong momentum. And note, the theme of this video is top ETFs for 2022. For the next 6 to 12 months, no idea what happens next. All you see, for the long term, this still seems like a great investment to me. These are, of course, gigantic companies: Apple, Macro, Google, and Tesla. Just look at how much innovation they are applying and how many more billions are they investing. Only Macro has already invested 80 billion this year, or let this year invest 80 billion in data centers. Really bizarre amounts. You can never compete against that as a small company. It's that simple. So it also seems interesting for the long term. However, the valuations have really gone up, even though they are great companies. So I would personally be a bit more cautious this moment with technology. However, the momentum is very strong. Last year, we achieved a 65% return. Of course, significantly higher than most ETFs. We had already talked about the expense ratio. So the costs are per year, 0.3%. 3%. If we look at dividends, they even pay out a little dividend. Not much, but of course it's not a dividend either. ETF. That should go without saying. The standard deviation is surprisingly actually a bit around the median of all ETFs. The turnover, that doesn't seem right to me because they just have very simple strategy, namely holding 7 stocks and rebalancing each number. It's that simple. Liquidity looks good. 2 billion in fund value and a daily trading volume of 87 billion. And finally, let's take a quick look at the latest developments. So we see a very strong momentum. The ETF has increased significantly, and regarding volatility, what we had talked about earlier concerning standard deviation, it has dropped once by about 1%, and another time by about 13%. So that doesn't seem too bad. A lot. Only if you look at the overall valuation, and it's going to be tough for the coming years, then I think that in general, technology stocks can sometimes drop significantly for a longer period. I find this very interesting. ETF, just focus on investing in high quality companies. I would choose to buy these stocks myself. And the only thing I can say is if you have a lot of patience, then I think you have a bias. If there happens to be a significant price drop, then you can buy these ETFs at a much lower valuation, and then you probably have little downside potential. And what you need is patience. And in the meantime, you might reallocate your capital into low-risk assets that still deliver a decent return in case a better opportunity comes along. Assets that still deliver a decent return in case a better opportunity comes along. But maybe for 2025, the strong momentum could mean that this ETF continues to perform well, outperform, or at least this year, compared to, for example, the S&P 500 and Invesco QQQ